Check, check, 1, 2, 1, 2. Good morning, everybody. We will be with you shortly. Good morning, everybody. We're getting the streamers streaming, video servers serving, getting those electrons moving up into that higher orbit from my camera to your video screen. Be with you in just a minute. Good afternoon, everybody. Good evening. Good morning, wherever it is in the world you're coming to us from. Welcome to DYOR Live here on the DYOR Media Network. My name is Tom, otherwise known as Striking, here in the digital music world. Hold on, I got the sound still going here. And so glad to be hosting another episode of this great award-winning show called DYOR Live here on DYOR Media. I think I got Pedro coming in here too, the man in the box to the left of me. To the left of you, to the right of me, Pedro Garcia, the crypto chart analyst, just spent yesterday at a show in Manhattan called StableCon, learning all about how stablecoins and how people are going to try to conquer the world with payments, but really how people are just looking for money for their either VCs looking to invest money or people looking to get money for their payments business. I'll let Pedro talk about that in a little bit. Wasn't as good a show as he hoped, but anyway, doesn't matter. All learning experiences. Today is May 30th, 2025. Is it the last day of the month? Last day of the month, I think. Something like that. But anyway, no?
It's not. Can you?
Oh, one more day. Last trading day of the month for Wall Street. Anyway, some interesting news coming out today. The U.S. government formally dropped its charges against Binance. That's right. Binance's lawsuits gets dropped. The regulation by enforcement is pretty much that was one of the last cases that hadn't been dropped yet, and it is out. CZ, I can see CZ being not exonerated. He did the money laundering stuff, but I can see him coming back eventually here and being welcome once again in the United States. Also, one of the big things we'll talk about later is Hester Pierce came out with some guidance on staking that the SEC is going to be following. In other words, they said, look, staking that earns interest based on someone else's managing your money, that's similar to securities, and we got to talk about that. But when you're just providing security to a blockchain, that's under your own control, and you can put it in and out as you want, and you earn as the blockchain gets used, not as it's invested, is not a security. So that's good guidance. That's what everybody in the industry has been saying literally forever, and only Gary Gensler disagreed with us. Anyway, some good stuff to talk about. Also, the theme of the show today is Michael Saylor. Michael Saylor, as you know, has been buying the Bitcoins, and he put together another big recent purchase, and everyone's confused about it. People are saying he's doomed. It's just leverage. It's going to explode. And he got up on stage and said, you're all wrong. You're all wrong. So we're going to talk about that today. Anyway, my good friend Pedro Garcia is in the house. Pedro, what is happening?
Not much, man. It's been a really...
You're on mute.
No, I'm not.
No?
Nope.
Not on me. Maybe I just can't hear you here. Hold on. No, I got the headphones on. Let me check the old... Oh, yeah, you're right. I can hear you on the stream, but not in my ear for some reason.
There you go. It's all good. It is all. What is up, my peoples? It is good to have everybody. It is a grand old time. It's crazy. A lot of stuff that is happening. As Thomas said.
I don't know why I can't hear you there.
Thanks, Hattie. Appreciate that. It's real interesting because I'm watching a lot of the stuff that's actually happening here in the world, and with Gaza ceasefire.
Go ahead, Pedro. Give me some words there.
Hello. Can you hear me now, buddy? Can you hear me now?
This is weird.
Hello, Tom. Take ground control.
Pedro, give a little intro on what you were doing yesterday, and then I'll try and grab your sound here. I have no idea why I can't hear you. Your sound is on.
I shall. All right. So yesterday was a really unique day for me. I went up to the stablecoin. As you all know, I've definitely been paying attention much more to stablecoins. I believe stablecoins are going to be like the bonds in a sense, where, as Tom said, they will give interest rates, or not interest rates, but a yield to it. And I think it will be much favorable to the investor than buying bonds in a sense. But also in the back end, I think there are also going to be just the undercurrent of what we see and just the framework where what we're really going to see with crypto. I mean, it's just one of the guys that I really thought, and I'm actually going to see if we can bring him on, talk to some of those guys at Fireblock, and seeing the stuff and the units that they are moving are astronomical. We're talking trillions of dollars every year, and they're seeing a 10% growth month over month, not year over year.
That's a lot.
Yeah, so there is so much stuff happening here, yet it's very cutthroat. You are literally seeing hundreds of stable coins being produced, getting pushed out there, trying to get money into it. And there's a lot of players here. Me and Tom were talking off camera yesterday, and it said, honestly, there's going to be 2 or 3 that are going to beat and win out. And it was really interesting as I thought about the last speaker, who was BlockFi's CEO, which I met one of his right-hand guys.
Fireblocks.
Shout out to that dude. Yeah, Fireblocks. But what's interesting in all of this is just watching. Why am I again? I don't even move it, and it just. There we go. And you can see here, I have in my background stablecoin, chairs there. But what's interesting is that in the whole entire system, as I'm actually watching it, it's a battle. These guys are fighting for their life, and they really are trying to get ahead. I mean, these are going to be the banks, I believe, the banks of the future, possibly. And the way they're setting things up and how they're setting it up. So it was very cutthroat there. People were very much there for business. I, as a potential, YouTube guy to bring them onto my show, they were like, well, how big's your audience? And I said, well, we've got a couple thousand at times, and there are times we got a few hundred, but it just, roughly. And he was just like, and I go, they're more crypto centric, but I've been trying to get them to pay attention to stable coins. And a lot of these guys are just like, and I could see them calculating in their head, like, is this going to be profitable for my business? and for now, because again, they're fighting for now, for money now, not in the future. And so many of them were just kind of like, talk to my HR guy. And he gave me the whole entire, as back in the day, here's my card, give me a call, right? Now it's more like, talk to my HR person. I did make a couple connections. Go ahead. Yeah, pretty much. So, but what was really interesting though is I did come across a couple other people who were really sweet, that were like, "Yeah, I would really like to come onto your show. I have no problem with small shows or big shows, but the thing is I literally have to go through my HR, or I have to have compliance look at your show and see if it's compatible, because I represent, let's say, a law firm. I represent a large entity. I can't really talk about banks that."
Right.
That was the other thing. They said if you interact with me, you can't mention me and who you talk to, because that all has to be, and they can get it striked. Well, out of respect for them, because who knows, I might be there next year again and pop in and say, hey guys, what's up? Just want to say what's up. We've grown from like 15,000 subs to now 150,000, and then additionally to that, we've also grown the point where I mean, those things are going to be just dope. Those days are coming. But like ultimately, I'm really expecting us to see some really cool things that correlate with this. One being a few of these people who are major players in the stable coin will be major players in crypto here, because I believe they're going to have obviously the MVP will be the stable coin, but I think someone will launch coins, and those coins will then go either to some type of exchange for large institutions, which I heard a lot about. And a lot of the people there were very very focused, very centered. They really didn't really want to talk too much. Whereas if you go to a normal crypto event, right, everybody wants to talk to you. Right. Everybody wants to network. Everybody wants to connect fully. And it was just kind of like before lunch, everybody was kind of scouting out who they needed to talk to and what was happening. And then after lunch, it was like, go time. Let's, we've got 5 hours to secure our bags here and get investors. And I spoke with a few investors as well. Those investors were really looking for, and this is what they're, it's what I heard a few of them say. They're like, I'm looking for a 50%, 100% return in a year, let alone, I mean, that's the least what they want. They're expecting, 500, 1,000. Some even said we're even like 10, 15,000 X within 5 to 10 years based off of the stablecoin revenue that potentially could be coming in.
Well, so, I got to tell you, all of them are using the Tether and Circle example of how to run a stable coin, and they get billions of dollars under management, and they can just give that money to the U.S. government and get free money in the form of interest on treasury yields. And that's a good sales pitch for all of these VC firms. They're like, it's low risk. But the problem is that the whole how do you use the money, how do you earn money thing is all great. But who's going to use all of these stable coins when everyone's already using the top it's Tether at 180 billion now, or 70 billion, whatever the heck it is. Circle at 60 billion. I mean, PayPal's at 400 million, and they're at like, wow, everything's great. And that's nothing. 400 million, for these guys is they're like, okay, that only gets us, $4 million a year in interest, or $2 million a year in interest, or something like that. They're like, big deal.
Well, so here's the thing that people aren't really talking about. So they say it's cheaper to they say it's cheaper to to send money through stable coins, and this was a fallacy that I actually believed, and they realized, like, look, it's expensive to use it, but the key is the speed, because the fact that you can trade and send money literally within seconds gives you the opportunity to utilize that money instead of a 5-day period, and sometimes a full 7 days. Like if you send money, let's say on a Wednesday in Brazil, and this is what I found out, you may not get it till Tuesday or Wednesday the next week.
And it's devalued.
And it's exactly not just devalued, but also you lose the opportunity to deploy it when you need it, right? And so the fact is that stable coins allow for a faster transaction, almost instantaneous, right? Allows the individual to be able to actually capitalize on market fluctuations that can happen almost instantaneously, like i.e. we talked about Monday, right? The market selling off, right, for Bitcoin. And in that same sense, hearing these guys speak about like the money that's coming in and out and what we're seeing was a major kind of like aha moment of, oh, dude, yeah, of course. Like imagine they're saying, all right, we think the market is going to go from, we talked about this area right here, right? The 111, 250 area, right? To the 110, 630. I said, guys, if it comes up here and we start to see a sell, expected to get down to that 105 area. We talked about this on Monday and Tuesday. Like, this is a good play, something for you guys to play with. Boom. And sure enough, boom, came and hit it. Well, if you want to take advantage of that, but let's say your liquidity was short, and you're like, yo, how do we get liquidity? Oh, let's go here and borrow it from and ask for it for here. And because they're not a part of the repo market, they can't just sit there and ask for $1 trillion, or not $1 trillion, before, let's say, $100 million.
Yeah, right.
Because they're not a part of that market. And that takes, like I said, even though that's an overnight lending, the problem is you've got to be state regulated, or government regulated. There's all these regulations that happen with that. And so this here allows for like being able, or stable coins, and the transaction there, even though it costs you about the same amount of money, right, is instantaneous. And so your fees that you're actually making on these are pretty darn good. And I don't mind paying for it if I can have access to that money quickly and deploy it in the areas that I need to deploy, whether that's paying my employees, and that it also frees up liquidity for many companies to sit there and say, if we happen to have something where we need to pay some out, you typically pay somebody to hold the liquidity, called payment. What are the payment people called? There's a lot of stuff that I was going through the conference, realizing I was like, oh, wow, you're right. Like if you're a small company, you've got to pay somebody to pay your employees for 2-3 weeks out, because it's hard for you to hold up that liquidity, because you're trying to deploy it quickly, right? And put it into other things. So you have to actually pay somebody.
Yeah, that's what's called borrowing against your payroll, and it gets companies in trouble every effing time. I watch so much. Yeah. They'd come to me, Pedro. I ran payroll for my companies for a long time, and they'd come to me and say, oh, we'll guarantee your payroll is funded every week, no problem, that kind of stuff. And you're like, wow, look at the fee on that. And it's like, I'm like, oh, essentially you're assigning me a credit line. And they're like, yeah. And I'm like, I don't want my payroll to be on credit. I said, if you're a massive company that's got a credit line and whatever, then it's fine. But when you're a small company, every little bit of credit, you're screwed. And you have to not only pay, you have to make double the amount of money to pay off the debt and then get back up. But Pedro, you made a good point that stable coins have a conundrum. like most cryptos that you want to pay somebody with. They're really easy to use if you and the other party are crypto-centric. Meaning if they're operating in USDT and so are you, they're like, send me, $1 billion. Boop, no problem. However, if both of you are operating in cash or in TradFi, and they're in Europe and you're in the States and they want some money, and you have to send them a lot of money.
MiCA issues, yeah.
Well, you have to onboard your $1 billion first into crypto, which is not easy for that amount of money.
So this is the other part.
And then send it. It's going to take just as long, and your onboarding fees are as much as your wire transfer fees. And so where I see all these people really taking off here from stablecoin is once industries are based on stablecoins. Once they're in that, they take payments on it and they pay people and they just settle the cash when they need to deal with the traditional finance system. But a lot of these companies, in Chicago, I met people from Coinbase, and they're like, yeah, we can choose to get paid in USDT or US dollars. Doesn't matter. We can however we want. And so there's already, there's a small group of people operating in stable coins, but it's too small right now. It's too small, and none of these companies are going to make any money until that essentially the entire market can operate in it, because the fees are so low. How many transactions, Pedro, do they have to do just to be able to pay the secretary or the receptionist or the person, the equal opportunity greeting person at the front who's just as smart as the rest of us? They have to do a lot of transactions, and there's just not that many transactions right now. So they're all going to be cannibalizing each other, and they probably all know this, and why they kind of kept you at bay. We don't want anyone telling the truth.
I actually have to jump in and correct that. There is a 10% growth month over month, and it's speeding up. I mean, they were showing the graphs and all. I mean, just with PayPal and buy USD or BYUSD, this idea that like they just started this, and to see it grow over the percentage, it's growing to the point where they're saying within a year or two, as it starts to move, everything's going to transition that way. And there is a lot of transactions happening. I mean, there's literally, I think they said it was 50.
Well, yeah. Remember, you have to. What you need to do is you need to eliminate exchange transactions and crypto trading transactions, which are a majority of.
No, this is not. No,
there's just not that many payments.
You're wrong.
How can I be wrong?
I'm telling you, and this is the reason.
How many people do you know that even make stablecoin transactions, and they're saying there's millions and millions and millions? I don't believe.
No, yeah. So this is what it was interesting. They're doing more transactions than I spoke with, and this is why Visa, excuse me, not Visa, but MasterCard, excuse me, I'm gonna cough. Visa and MasterCard is basically trying to get into the stablecoin industry. Absolutely. Because they did more transaction, just simply money sending, not buying crypto, but money sending around the world than both of them combined. So this is important to understand. This is real money. And they know that they're losing its ability as a cash-based system. And I spoke with the guy. He's going to come on. I got to talk with his.
Well, if we're talking about we may be talking about the same thing. We may be talking about something different. I saw the studies from Visa and MasterCard talking about payments and all that type of stuff. And with just a little research, if most of the stablecoin transactions, when they were talking about this, are exchanges arbitraging between exchanges. They're there's a million a second. Back and forth, because that's the only way arbitrage works between exchanges, is you have to use USDT or USDC, something like that. And when you eliminate those, the amount of people actually paying with stablecoins is less. And most of it is the diaspora sending money home to Guatemala, to Nicaragua, and that type of stuff.
That is huge. That's actually a huge amount. It's not the diaspora, how do you call it? Diaspora.
I don't even know if I used the right word.
No, you did, and you did. but yes, that is actually a huge amount. It's not something to say a little amount. For whatever figure you looked at, we're talking at least at, I mean, these guys had the figures up. They were sitting right there like, look, no. And then they said, you may be thinking about this, but no, if you look at it over every metric, everything is going towards stable coins
You using the whole
and
fist
actually how it's going to transaction. Banks, one of the biggest things they talked about is the Stable Act as well, and the not the Genesis Act. What's the other law that's being put into Congress right now? Not Genesis.
Genius.
What is Genius? Thank you. My brain was just thinking Genesis. I was actually learning about AI stuff earlier. So the Genius Act, as well as the Stablecoin Act, is literally setting up where major banks are trying to get things, because here's the thing, there's so much money and so many middlemen that you have to go through, that everybody gets paid, right? That they're trying to eliminate the whole entire system and just be able to send without an intermediary. And so intermediary, there you go, intermediary. And without that and without that middleman, it's going to allow things to just cycle through so much quicker. And so this is where they're actually pushing, like, this is going to make America, as well as many of the Western, because the reason why, through MICA and what's happening with the CBDC system, it is going to get in the way, right? And so there's almost this battle, this fight going on between the two. And ultimately, whatever one is more efficient is going to win out. That's what we've seen in history. And the stablecoin ideology is just more efficient. It's just more efficient than a CBDC system of a draconian hand on the back of the neck.
Now, everything run by the private industry is more efficient than inserting government into it, that's for sure. Welcome to the show, Baby Draco. Jesus, all the way from San Francisco. Thanks for joining us. Really appreciate it. It says, we need a point-of-sale system where businesses take crypto but can receive fiat in exchange. I am more than certain they have that. In fact, I have a Square system, and I've gotten the newsletter saying that they will be doing just that.
The BlockFi guy, I'll have him reach out, or I'll put you in touch with them, but they're doing so much of that right now in third world countries. And in addition to that, they're doing so much of that just in America. Like, just, it's already set up. You can actually go. One of the biggest barriers, and this is what they were saying with the stablecoin situation, is, like you said, is that when you buy it for $1, but you only get back 99 cents, right? And that's very frustrating, right? It's like, where's that $1 to $1? And this is where they're saying that this is one of the biggest issues, because that micro, like that 1%, is a big contention point. And right now they're really settling that up. And so I talked about the whole entire fluctuation on Monday and Tuesday between it going from, a parity of $1 to literally all the way down to 95 cents and 103 cents, and being able to play the two. And so I brought up the fact of, hey, look, you've got a lot of these situations. And the guy goes, well, that's actually going to go in once we actually have certain regulations kick in, where we can actually have a parity, and it will be backed by real current or real assets that keep it at that level. And so this is where they're saying it will be an instant transaction, where that doesn't necessarily cause that fee per se for, people less than XYZ. So it's going to be really interesting as we move forward how they're setting certain things up. Again, I don't know it in detail. And again, I'm still learning a lot of this, so I don't want to sound, I think I'll probably go back and look at this episode in about a year and go, I'm an idiot. And go, because I've learned so much. But yeah, it's just really interesting to see where we're headed, how it's being developed, and also the contrast, opposition. I call it opposition, probably shouldn't say that, but other systems are being created, i.e. the CBDC out in Europe, and how they're actually trying through MICA kind of really get a grasp on crypto, but in a heavy-handed way. So it's going to be really interesting to see as we progress here. I know we just talked a lot about this, but let's talk about Bitcoin here real quick and see what's going on here. So we're starting to see the sell-off and the wick of the month coming in. We have the monthly wick and the daily wick, or monthly, weekly, and daily weight kind of coming in. We talked about this area saying, all right, I thought we were going to get to that 115, but we only got up to the 111 area, 110. And this was the all-time high previous right here. So you can see here as we came up, we tapped it, which was right here. Then we sold off down into our lower level here. And so we're doing exactly, potentially, I'm expecting this to come down to that 91,000 potentially. But ultimately, let's go ahead and see what it happens. If it, and again, you know me, I'm always trying to see how I can take my short longer and short that for a longer period, right? So I've got two areas here. I've got that 101 area and that 91 area. Tomorrow is going to be the end of the month. And so I don't think we'll get down to 101, even though we're at 103. I know that's just a blink of an eye. It's 2%, but you know, like just 2%, like institutional, like TradFi, it's like 2%. Oh my goodness, right? Like, because we, you know, at the beginning of the month, we went from 111 all the way up to 104, which is huge liquidity. It's that's a huge, you know, supposedly. So it's like a 10% sell-off, right? In comparative to what's
and that's a
happening.
disaster in TradFi. 10%, and oh my God, whatever. Bitcoin, you're like, nah, the chart said it's going to go there, whatever. But although yesterday, Pedro, when you were at the show, the Nasdaq, not from the open, but from the high 2 hours before the open, dropped 500 points, and 500 points for the Nasdaq. Let's see, 2,000 points is 10%, so it's 2.5% in an hour and a half. That's big numbers for Nasdaq. That, you know, if you know, a while ago, if you had said, oh, the Nasdaq dropped 500 points, you would have been like, oh, we're in a Great Depression. You know, it's like, that's it, we're done, pack it in. And that now, I was like, eh.
Yeah, it's almost like Bitcoin is reestablishing what real volatility is, or maybe a false volatility until it really starts to get going. Like, you know, when I say get going, I mean seeing the adoption really happen. Why isn't that allowing me
to? Quickly, Pedro, I'll just do a quick thing I mentioned at the beginning of the show here. Hester Pierce talking about, why isn't my screen coming up? There we go. SEC Commissioner Hester Pierce, aka Crypto Mom. How'd you like to be that? The top pinnacle of your career, you know, Harvard educated, wherever educated, wherever, you know, SEC Commissioner, top of the financial world, and people just refer to you as Crypto Mom.
Yeah.
But anyway, she's taken us under her wing because she knew that Gary Gensler was a complete moron and leading the government astray in their enforcement by regulation, their regulation by enforcement principles. Anyway, one of the most important regulatory clarifications of the year, Hester Pierce said, protocol staking equals directly securing a blockchain, ETH, SOL, AVAX, etc. Staking as a service, intermediaries pooling customer funds to stake on their behalf. These are legally very different. Pierce argues that the protocol staking is not a securities offering. Why? Stakers secure the network directly. Rewards are protocol determined, not dependent on management by others, and there's no investment contract under the Howey test. But centralized staking as a service platforms, like some exchanges, may raise security issues if they pool customer assets, exercise managerial discretion, and promise profits based on their efforts. Pierce criticizes the SEC's current approach, which is ending, I might add. Blanket enforcement risks harming innovation and pushing protocol development offshore. She calls for clear rules, not case-by-case punishments. And this goes on to a lot of other things. But that was the point for that. That was very refreshing to see that come out and have the SEC. It's not their official position yet, but Hester is now in the majority, and she's leading. She's in charge of the little SEC subcommittee that is handling this. So we can see that that's going to be coming down the line soon.
I think what's interesting, I think this is really important to understand in crypto, when we talked about this, and at first I started second guessing my thought processing that, because you know, when I was on with Chris and I said the Democrats have got to come over. They have to come over if they're going to want to get the votes. And he was like, bro, they're not going to. And we saw it like for the last few months, right? While Trump has been in office, they've just been like stagnant and adopting crypto and really trying to sit there and see it. And the fact is that you're seeing a lot of the moderate Republicans and moderate Democrats, which are few, but they're still there. They are starting to say, you know what? The SEC is lightening up. We're seeing real progression in this. And even though this idea that the Biden era Democrats, I think that's actually a good name for them, Biden era Democrats, just like you have your, Trump era Republicans. I think they're losing grounds because the fact is that there is so much money in this and the Democrats. And so we're starting to see kind of this hue of people leaning towards that view of, you know what, maybe we should at least somewhat acknowledge this in Washington. And so we're seeing with that a lot of, and yes, it does help that we have a president who's pro Bitcoin, but, and Trump is pro crypto, right? Like Trump is legitly, he one part of, as Chris says, he's an opportunist and he understands what the populace understands, and he's always going to go with the percentage of the 51% or a majority vote for how he views things, right? And so that one thing, that's what we saw with the switch in Doge and really pulling back. Even though he had the mandate, there were so many people losing jobs and a lot of things were happening. You almost had to pull back and go, okay, look, we gotta focus this, and that really kind of, I think, with what we saw with Elon, just that kind of breakdown of that relationship there. But ultimately, he was smart in how he established his system. And I think we're going to see a lot of Democrats kind of come into the back of crypto and sit there and say, you know what, I see this, I see the benefits here. Let's go ahead and move forward. And Mama Crypto is, I think, a big part in that.
Crypto mom.
Crypto mom. I just had a word salad there, and forgive me for that, guys.
That's all right. I'll let you run with it. I was closing out a short trade.
How'd your short go?
Good.
Why did you get out? We could still fall.
It could, but it hit my target, so I was happy with it.
I was going to say we. And this was Bitcoin or the NASDAQ? Which one did you get in?
Bitcoin, I did a 3-for-1. About an hour ago, I put the trade on, and it went up a little bit, and then just dropped as soon as NASDAQ dropped, Bitcoin dropped. I got to tell you, Pedro, it's the first time in the past 24 hours that NASDAQ and Bitcoin have been back in sync again. For the past 12 hours, they've been doing opposite things. In fact, this morning when the NASDAQ opened, it was going down. Let's see, what time is it? The night. The NQ opened at it went down from 21,381 to 21,237, and Bitcoin went up, and then it wasn't tracking at all, and then all of a sudden NASDAQ decided to tank here, not a lot, just a little bit, and Bitcoin said, okay, we're going to follow suit, and did so. But it's frustrating when you're looking at, when you're trying to use all your tools in your bag, and for a long time, two indicators are moving in sync, and then all of a sudden they go whoop 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 whoop, and you're just like, damn it, can't rely on that all the time. But that's the reason why what you teach me, Pedro, is you use many different indicators. You don't just rely on one. If you rely on one, you will get it.
That's why I have a few, and they basically paint a story for me. And that story is a clear system, right? Like I've got single rules that help me out, and they all play off each other. So I'm able to really be able to look at the market and kind of see it from different views on different time frames, right? One of my biggest indicators is understanding how the time frames correlate with each other. And I think when most people trade, like they'll have their different time frames, but they don't realize that they really play a part in each other's movement. And so understanding again that deeper meaning for it, I think whatever time frames you use, look at the correlations that they truly have with each other, the ping ponging, the movements in its waveform, right? And then once you kind of understand that correlation within your time frame in your trading, then using your indicators to then confirm, right? So you have your time frames and you have your indicators, and as they come together and you bring those together, you can then really play off taking that micro trade where you risk, let's say, $10, and then right, and you're like, well, this should this should correlate with my 5 minute and my hour and my 4 hour and my daily, and we should see it turn around and go in the daily move. And so you can capture, as you said, you went short up here, right, at 105 area, and then you said, about an hour ago, and then now it's shot off. So you understood, wait, I want to capture kind of that daily move because we're at a point where it could follow through on it. They're selling off. It's the end of the week. It's the end of the month. And we should see, as most people, profit taking, as I've been communicating it. So this was a smart play that Tom played here, right? And
Right, you told me over and over again, Pedro, that at the end of the month it was likely to dip, and the chart was kind of showing, well, it's coming down. It's coming down. So I put 2 and 2 together and added $70 to my account.
I think, yeah, I love it. I do love it. I don't understand why I don't have any in my moving averages, but I love it. Why isn't it giving me my moving averages? I can still trade from this. It really doesn't even matter anymore. I'm at a point where it's, I just use it as confirmation.
Crypto Mike in the house. Pedro, you didn't have the sound effects in the ear, but I just played "Oh Canada" for Mike.
Oh Canada. Awesome. All right, so one of the things I also wanted to talk about, so it is one of the primary things that we talked about here, is Michael Saylor, bro. Like, actually, before we do that, let me give a couple other things that we can sit there and play off, and then we'll go into Michael Saylor, because I think it's really important to understand what we're doing for the month and how we can play off of it. Is that fair?
Sure.
Okay, so we got the new month coming in. All right, guys, like I said, I've expected to maybe potentially come down to that 101, 110, and this lower level here of that $91 area. As a month, potentially, just as we create a new candle, we want to see it come down first. So anywhere between the 91 to, I would say, that 95 area here as we create this push. You can see here, I do have a trend line here. As you can see, it's playing, and so I expect to see it coming back down to hit this level roughly, and again, that's like that 95, 92 area here. I also have a play for a weekly down to that 101 area as well, so we'll see. Now, if you want to capture a quick long while we're doing this, one of the things we always talk about, like here was a liquidity pull that we saw right at the end of the month. We came, tapped, and then we sold off, right, and then we came back and pulled back. You can see the same situation right here that we could play off of. And no, that's not what I'm trying to do there. Boom. All right, and this is going to be a quick little play you could play. That's going to be this area you could go long potentially for the day, or maybe a 4-hour trade here that you can sit there and play. But it's going to be that 180, 108.10 area. Again, this is BUSD or BTC USD play, right? So whatever one that you are playing off of, make sure you're understanding that that number might be different, right? Like, so understanding the stablecoin that you're playing BTC off of will change that number, but it's really where you see this liquidity pool right here, playing from the 100 to the 89, and right here you're seeing a lot of stops below here. And how I always explain to you guys, and this is really important, right? Whenever you have buyers, you have sellers. Whenever you have sellers and an influx of sellers, you're going to see buyers. Institutions are always needing orders, so they're always going to play that other end. So when you see it coming in, as prices starting to come down, a bunch of stops are going to be hit. And those stops are basically going to be buy stops or sell stops, right? Because people are long from this moment on up. And so when this hits, a bunch of sellers are going to come in, and the institutions are going to come in and buy up those sellers and push the market up, right? And so if that is for a week, a month, we don't know. But this area, or excuse me, this area right here is something I'm potentially looking to play maybe on a daily play into next week as we continue. Also, when that plays, look, Pay attention to your trending mechanisms. I have my own, which is the moving averages, but other people use other things. Well, it's a divergence, or whether you use, what do you call, VWAP or the other WAPs out there. Either way, like, dude, there's so many things.
FAP.
Yeah. So those VAPs, WAP, excuse me. It's really important to pay attention to what you're trying to do there and how it's communicating your trend for you. So if this is the low for that month and it creates that wick for the seller wick, for the demand wick or the demand zone or the buyer wick, as I call it, not seller wick, excuse me. You can see as it comes down, we'll see a drop, hit, pop, and go up. So be ready for that. It's a potential play. Come Monday, we'll see if it happens over the weekend. Be smart and understand. Tomorrow is Saturday. Sunday is going to be the new month. It's going to be the first of the month. So we may really kind of push down first to go up in the beginning of the week. So we'll see what happens. But giving you guys a heads up so you can play this play right here at that one. And you can see here where this big candle is, right? That's big old candle. You can play this, and this is a good play that you can sit there and play, and it's called fair value gap. If you're looking to learn a little bit about it, it's on ICT Smart Money Trading. Go check it out, fair value gap, and typically you can play it right here. Also, make sure you're paying attention to your trending mechanism so you don't get caught in between that, like that whipsaw area. Also, a similar situation with Ethereum. Ethereum, you can, where is it? I thought I had put it right here.
You know what? Use the magic word homie there. Oh, I should have kept that short on there. Oh well. Made money. Yeah. Go home happy.
Yeah, it's most. And is that real money or is that still play money?
This was a demo account.
Okay. But you can see here, here's another play you could play on Ethereum. This is another area again. As we're looking at that monthly chart, I'm expecting maybe a pullback to this area here. And I know we have higher time frame SMAs as it would parallel up there. I do not understand why my moving averages are off. Where am I at moving averages? What happened here? Like, I don't even understand how they even.
Ooh, an ETH chart in the past couple of minutes did the same thing as the Bitcoin chart.
Sorry guys about that. Give me 1 second. Also, to any of our new viewers that I actually had come watch us from the stablecoin, thank you for watching us. Please shoot in, shout out, say where you guys are coming from. Love for if you guys have any questions on how I trade. Also, a lot of you new guys that I didn't meet yesterday, if you got questions, one of the things, and you may think I'm full of shit, fair, right? But I always point everybody to go look at our inauguration video. I went over the full year, what I expect over the next 6 months to a year, and go through and look at the charts. Like I always tell everybody, you can talk like you have a big old game and you can lift a bunch of weight, but everybody, you can even have big old muscles, right? Talk. But the real test of a person is really, if you get into the gym, you put the plates on. Can you lift the weight or not? It's that simple. It really is. We all have an off day, but to call a market at a large scale, like what I've done now multiple times, I always say, just go look at my videos. My receipts are in the videos, meaning typically what I see in the market, they do it. Now, again, this is not financial advice, it's education and social entertainment purposes only, because I do not want to get sued. And that's still not up, Tom.
Yeah, I put it up and down and occasionally.
We got to put that up nonstop.
No, it can't be up nonstop. Nobody does that.
I don't care. I don't want to have to deal with the.
You're not going to get sued, Pedro, because I didn't put something up for 10 seconds.
All right. So,
Pedro clearly in disagreement with me, but we run it about, in a 2-hour show, we run it about 20 minutes of a 2-hour show. And all you require is just a little 10-second frame at the end of it is really all that matters. Actually, none of it's required. None of it's required it's not actually the law that we can't give financial advice. Only if someone's paying us for financial advice. We can't sell our services to individuals as a financial service provider, which we're not doing. But everyone in YouTube just does this anyway as a get out of jail free clause. So we do it.
Yes.
We can tell people, go buy that. Go buy that all the time. As long as they're not paying us under state regulations or under FINRA regulations to say that we represent a financial authority. Just being YouTube gabbers, blah, 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 blah.
All right. Well,
but I'll run it.
Yeah,
just run it all the time.
I was gonna say, just run it. I just want it ran, just because it makes me.
It takes up so much space on the screen, though. It's like people know it. You know, it's not like anyone's sitting here and going, "Well, I better put Grandma's pension in here because Pedro said so," and Tom nodded head. Oh, let's sue them. What they get sued for is for taking money for it, not representing it, like all the football players did, and the supermodels and the Kardashians. When they were pitching it, they didn't say I was being paid for it. Because they got paid, gave financial advice.
They take away other stuff again? No. All right. Give me 1 second, guys.
I'm listening to the stream feed in my ear, and sometimes my voices crack me up. my kind of white guy voice. Wow, there now, Jim.
Honestly, bro, you really do have like the white man voice.
Yeah.
Like when you hear about like black comedians, you know,
like Dave Chappelle when he does it,
dude. So much, dude. You're like, well, you know,
right.
and I mean this in all respect to all the.
Well, Jim, I don't know if we should invest in that, but Pedro said we should put Grandma's pension in it, so we better do it.
Pedro did not say that, and I do not subscribe. Even just joking around about it, I won't even play with it. I'm just that paranoid because people are people, and I understand people pretty darn well, and so I'm just don't let people be people. Help me, I help you, help you. Right? That's it, and I keep it fun that way. Okay, so we just was able to take care of this here real quick. So one of the things I want to bring up.
The final frontier.
Welcome, Space Cat, to the house. Thanks for joining us. I assume you're at the gym working out. Keep it up, old man. Sorry, Fred, but that one had to come out.
Space, dude, I still miss you, man. I hope you're doing well. I hope you and your wife had a great time on that trip, bro. With the money you made from us.
That was Draco.
Oh, Draco. Are you sure that was Draco?
Yes. He made it on like Avalanche or Avax or Avax or Elia or Doody something.
Elia, whatever one it plays. But I'm stoked about that. Dope. All right, so let's check out here. Ethereum here is one of those ones that I think has got a good play here. Sup, Crypto Mike, good to see you. Space Cac as well. Yeah, I need a trip. Well, yeah, guys, I kind of give it to you guys here, straight up. So we hit this area here on Ethereum. Like I said, I expect a pullback here. Really seeing it kind of close below that 50 period moving average. If we do not close below that 50 moving average on this monthly, I would expect a retest of that to see it go up and come down and then push back up into that 3,000 area here. We didn't get quite to the 2,800 for the month, but we got close here, so it was really nice. And additionally to that, what I expect to see now here is to see it open up around this level here. Okay, so this is gonna be it'll first be red, and we should see it come down, I feel, down to that 2319 area, if not a little bit further. Okay, we could make about halfway through this area right. This is where we could see the line around that 2190 area. It's kind of like what I'm looking at for the low here, and then to see it come up and watch it turn green as it moves up. So it would look something like this. Boom. Sorry, I meant to do that. Green. And we see it to this right here. Boom. Come down. Play. And then I'd expect to see this maybe get up to either right here or potentially the second layer here. And then as always, We see it put in the body, come back down, probably play right here for the month, boom, and see this type of movement right here. Y'all take a screenshot here and play how you want to play it. But that's kind of what I'm expecting to see. And we
screenshot taken.
And then we could see it kind of play right here. We could see it also get up to this level, but I'm expecting us kind of pull back first to go up into what we're seeing here with Ethereum. And that 3,600, probably by the month, we may hit. If not, then at least play this area here, or excuse me, 34, 3,500, we may hit up in these levels here. But if not, at least you're playing that long area until we come back down. So I'm really kind of excited about that there. What was the one other one I wanted to bring up? Was it Doge? Yes, Doge. So we saw Doge come in, hit the huge sell-off here over this past week, where we saw it kind of come up, come back down. We're hitting this 8-period weekly moving average here. And so I think this is a good little area to be looking at to play. When I look at the daily, that daily area right here could come back down to a little bit lower to that 17 cents area here. That 17-cent area, like I said, we hit that 20-period moving average, or roughly, and we started seeing it come down. I thought we were going to come and hit it to come down, but it didn't. It continued down. So down at this lower level of that 17-cent area is kind of like what I'm looking at. And so with that said, let's look at that. What is that? Around 1728. 1728, 17, where are you at? 1728, right here, boom. So we've got 1630 area for moving averages on your weekly, and on your monthly. Yes, we've got a bunch of moving averages here. So we might have a little bit of ping pong happening here, kind of going back and forth, seeking where they can get the greatest liquidity for orders before we go up again here on Doge. So I think this is a good play to sit there, play off of this level between that 17 and 15, 14 area as we kind of sell off to see it potentially go back up. So that's it in a nutshell for those little gems.
Oops, that was the wrong button, sorry. Let's see, Tom's screen here. Pedro, did you meet someone yesterday from Ugly Cash?
Yeah, I believe so. I did. Yeah.
Because they liked and followed us and so forth on the Great X.
Oh, nice.
At least he made one good contact there. We got one more follower on social media.
I love it. Yeah, I met a lot of people there just kind of pitching us and saying, hey, check us out. We'd love for you to come on. The biggest key that I do talk about this here, and I think it's really important to understand when I trade and how I look at the markets here, is that I try to make sure, like, I don't have a huge risk, meaning I don't want you deploying because we do win a lot here, right? And I don't want you to risk huge amounts of money on one play. There are many plays every single week we give to our community. There are many plays that we give to them that allow them to capitalize on, and that brings a diversity to individuals who are looking to capitalize on that. Many of our guys sit there and know, like, I give you, crap coins. We go over crap coins. Really small cap under $1 million market cap, right? Potentially where we can sit there and see a good play. Hopefully at 10, 15, sometimes we get 20x, 30x, but normally it's between 5 to 10x on a lot of these plays that we do play. And so you don't have to sit there. And the reason why I'm saying is to a lot of the new guys who are they're institutional guys or guys who are playing with a substantial amount of money, you can diversify a lot of these plays easily. And again, I don't give like a huge pour. I say, and many times I'll say, all right, guys, this is this range that we're looking to play right here. Right, and you can see it bounced off from Doge at this little level here. It went up, and and this is a weekly, monthly chart. So all of a sudden you caught Doge at 14 cents, and you saw it rally back all the way up into these levels here. So, or at least got up to this level here. You saw it go from 14 all the way up to 16 cents. Which is a huge amount. It's 10% move on Doge, sitting actually higher than that, because
10% move on anything is good.
Yeah, 20% move on that monthly play. So there's a lot of those type of plays that we play on major coins that have liquidity. And so my whole entire point is to bring you guys value in that sense. Let me check out the guys over on X here, because I'm not showing. Why am I not seeing you, bud? I don't understand why sometimes. There we go. What is your name, my friend? Thomas.
Let's put out the call there and
right.
say, welcome, X-viewers. Thanks for joining us, everybody, on all social media networks. People ask, well, what kind of show do you have? As Pedro knows, we used to say we have a YouTube show. Now we say we have a media empire. And you can find us anywhere where you consume your media. Okay, that's not true, but we're getting there.
Well, it is true. We're just calling to an existence where something that's just sitting in the ether, right? Or something that's sitting in our mind, and we're sitting there and we're working towards it. Either way, it is happening slowly but surely. We will have a network much like
Bloomberg.
CNN, there you go. Some out there that just goes over finance, and we already have 2 shows. We're about to open up another one, right, with Trade Time with Pedro, whatever one we're going to call it. But either way, it's going to, or a segment that correlates with it. And a lot of our stuff that we talk about financially, we're just going to be able to clip up and just give it to you guys in bite size. Like, all right, well, what I'm looking at for Doge on this day, what I'm looking at for Doge for the week, what I'm looking at Doge for the month, or whatever it would be, right? You guys would be able to just hit the clip and then be able to check it out quickly and share it if you would like.
You know what's really interesting is the scroller at the bottom here. I've had using this scroller for 2 years. Mm-hmm. And the Bitcoin price going across it isn't even close.
So it's
Solana's not even close. The only thing that's close is USDC because it's $1. Dogecoin 22 cents. What the?
That is funny.
I was just looking at it. I was like, what? It used to automatically update. Let me.
That is funny. Sometimes.
Yeah. Now apparently it stopped automatically updating.
Yeah. Sometimes the way it rolls. Bro.
I'll have to put a refresh equals 1 on the URL for that or something. I was looking at it. I was like, I just sold Bitcoin at $104,000, and I'm looking down here. It says 109. And I'm like, oh my God, I missed the mega pump of all pumps. And then I looked at the chart, and I'm like, wait a minute, something's wrong. Something be wrong here.
Well,
go ahead, Pedro.
No, I was saying sometimes those are really fun, but. Those little scares, you're like, oh wait, what happened? Like what happened with Solana, right? Like when it went from, I think it was Shogun. So we talked about Solana, the sell-off happening back here, and when it hit, or it was here. Excuse me, on the monthly chart. Back here when we hit this high here, and then we saw the sell-off come in, and then kind of a pullback. This was back in November. When the market was kind of going up and coming down, but we expected to see Solana kind of come up and then come down. One of the things that I'm definitely looking at for Solana is I don't think it's going to go away. One, because it's in the strategic reserve, but also more important, right?
Like clockwork.
Is to be able to play these plays. So here, I want to bring this up here real quick. So this was our play on Solana, right? It was going to be real quick, where it took liquidity and we saw it come up. But now we're coming back down. And part of me, I don't think we saw it. Normally, these only happen once. So I guess so. It came up into the evening, into our liquidity, shot up. You can see we really, on any time frame here, we didn't really see any meaningful above the 8-period moving average. So I would expect to see Solana again come back and tap that 147 area, 147 to the 32 area as we're coming down here. One of the things I'm kind of excited about is if it come down straight, like we just see something similar as it went up like this, I want to see that situation kind of come down into that 147 to the 137 area. This area is going to be a strong area, at least for some type of consolidation. So I think they're going to push it back up again at these certain levels here. Actually, let me rephrase that again. It should come back down to these levels here, what I was talking about, where we see the a lot of these moving average sitting and a kind of a magnet before price want to reach that area, because we saw this was the previous push up, and then from there look to see it get up to that that 259, 249, which is the next leg up. We've already cleared up all of this supply. The next supply that I would expect to see is up in this level here. So we should blow through this area and just kind of come back down, tap, and into this next month see Solana hit this. Obviously, this is the easy format. But what I'm explaining is as it starts to push back up, we'll recycle back to it and go, all right, now this is what we're looking to do. We're looking just to put a small risk, right? We're looking for a 4-to-1, 5-to-1 risk area here, which is going to be, let's say you put in $100, right? For it to get here, we're looking to make $500-600. So this is our area. And let's pull this up here. Is what we're looking for around this area, and we want to see it play up into this level here. So I'm kind of waiting and seeing. Once it comes down into that level, we'll talk about it. We want to see big volume come in. When that volume comes in, we want to see how it correlates and handles with the moving averages. But ultimately, this is looking 6-to-1. So it's going to be a 6-to-1 ratio. Basically, you risk 100, you try to make 600, and you are bright red tomato. Alrighty, my friend. Let's kind of talk about our friend Michael Saylor. What are your thoughts on that video of him? I can't hear you actually now.
Sorry, I put myself on mute during the dog barking. I was trying to fix my tan there when I got all yellow there, anyway, one of the things that there we go. One of the things I want to take a quick break here and thank everyone watching us on Rumble. We've got a number of viewers over there, 12 viewers over there. If you could share this with some of your friends or in any of the groups and trading groups you hang out with, we'd really appreciate it. We take requests, ladies and gentlemen, so if you're over there on Rumble and you're not subscribed and you can't leave a comment or hit like, please do so. Remember, with Rumble, you don't need to pay their $99 premium in order just to have an account with them. That's a bonus, and if you do join the 99 club there, use the link below here on Rumble to do that, then we get credit for that. But anyway, it helps the likes and all that types of help. And not only that, but you can drop a comment here and we'll discuss the project that you're talking about, either the token, the coin, meme coin, whatever, or just questions about the market in general. Also, we like to talk about one of our sponsors below me is BidFi here. BidFi is a central exchange that doesn't need any KYC or anything until you get into large numbers, in which then they require it. But they're a good quality offshore group to start learning. They have a nice demo account that I've been using a lot lately to trade futures, or I should say to trade perpetuals on crypto, on Bitcoin, on Ethereum, SWI, and all these other types of things, and learning how to do it properly under the tutelage of the man in the box here, next to us, and it's working out okay. And not only that, but BidFi will give you some free monies if you deposit some cash monies in there. They'll give you up to $100 USDT to trade. You can't just withdraw it, but you can use it to trade and all that type of stuff. It's a good deal. Doria, our contact from BidFi, no longer Stella. Bye, Stella. Doria is our contact now, and she is coming up with a new campaign for us that she claims will be low fees and good for us. And good for our viewers and all that type of stuff. And we'll have more information on that when it comes out. But the important part about it is you can learn to use leverage. And leverage isn't just saying, oh, I have $500. I wish I had 1,000, so I'm going to use the 2x button. Leverage is used to help you, essentially borrow money from the exchange to trade the position that you want to trade and use as little margin as possible. It's a very good tool, and used correctly, you don't really lose unlimited amounts of money like people say, oh, you can lose your shirt. You clearly can lose your shirt unless you do it properly. So come here to learn.
Definitely.
But the let's Pedro, let's move to the topic of the day here. Just have a good discussion about Michael Saylor. He's back in the news again because he always gives a speech at Bitcoin Magazine's conference. And this year they are talking about his company and his focus on it. And so the theme of the show today, as you can see, was Bitcoin Money Machine. Oh, you didn't hear the sound effects for that. Let's do that again. Bitcoin Money Machine.
The wrap up. There you go. Yeah, man.
Anyway, we were talking about just because it's interesting, and I learned a few things about it. And when I learn a few things about something, I like to talk about them because it cements the idea in my head, and also I can figure out. I also will think through it on my feet and go, wait, that's not right, or I don't have much information. But anyway, there was this interview that Saylor did. Let's see if we can bring that up here on the Vegas stage here 2 days ago, talking about the purpose of his company. And I'll spare you from it right now. I have something keyed up that I do want to play for a second. But one of the things that was interesting to learn was, did you know, Pedro, do you know that Mr. Saylor is an aerospace engineer?
Really? Did not. Please elaborate.
He went to school, much like Striking Jr., to become an aerospace engineer. And aerospace is the combination between aeronautical, flying through the air, and space, and this type of stuff. And so he graduated thinking he was going to spend his life building space planes and rocket ships and all that type of stuff. And obviously I don't know how old he is, but he's got to be at least 10 years older than me. Mm-hmm. So he literally grew up hoping that he would be building the next space shuttle, and or he probably would have ended up working for a company like SpaceX. But instead, he got into management and said, I can do this better, and started his management IT consulting company, MicroStrategy. And then, famously a long time ago, started buying Bitcoin. And one of the things that I never understood about his company is that I always assumed that he had this giant consulting business on the side, but I never heard about them from the consulting side. But it turns out he's been winding that down for a long time. Still very profitable, the clients he has, but he's concentrated on a bunch of larger enterprise, big money accounts, as he transitions himself into a completely Bitcoin-oriented company. And I'm just going to quickly go over that. So. And some just nuggets of information that he talked about. But before we do that, I want to play this 5 seconds of video here, or not 5 seconds, but about 30 seconds of video. He talks about the gold standard and the Rothschilds, and how people say, oh, gold was the big thing, and he's like, well, even back in the day, gold was very difficult to deal with. I thought this would be interesting. So I'll
great point.
See if we can. See if everyone can hear this.
And then when they did cash settlement, you know what cash settlement meant? Cash settlement for the Rothschilds in the 19th century. But I bring this up because Bitcoin's a peer-to-peer cash system, right? And all these people, they're always tweeting at me like, you don't understand what peer-to-peer cash is. Okay? When the Rothschilds cash settled a bearer bond transaction in the 19th century, that meant they traded the bonds for gold bullion or gold coin. And so cash meant gold. It meant metallic money, either in bullion form or in coin form. But even then, gold was too slow and too cumbersome to settle very frequently. And so there was a fiat currency, these bonds, trading over the cash system, and the gold standard all through the century. And I think it's important because if you look at Bitcoin today, Bitcoin's digital gold, it's digital cash. What does it mean? It's a bearer instrument, a monetary instrument. What do I think is going to happen? I think it's going to keep growing from $1 trillion to 10 trillion to 100 trillion. It's going to keep getting bigger and bigger in the capital stack. And I think other forms of money, fiat currencies, will continue. You're going to have sovereign debt, corporate debt, other type municipal debt. As long as you have cities, they'll issue debt. As long as you have countries, they'll issue debt. As long as you have companies, they'll issue debt. As long as you have families and they want to buy a house, they'll issue debt, mortgage-backed debt. You're going to have all these forms of credit when people cash settle. The settlement network will be Bitcoin. Was the world built on a gold standard in the 19th century? Yes, gold. But what circulated? Sovereign debt. Will the world be on a Bitcoin standard in the 21st century? Yes. What will circulate? Every form of credit of every credit-worthy counterparty, and then on top of that, equity, layers of equity from public company, private equity, and you'll have all sorts of other collectibles. I don't see a world where that disappears.
All right, I played that, Pedro, because it was really important to understand where he's taking the company based on what he just said. What he said was essentially that what we all know is that the gold standard used to be the thing. And thus gold became very valuable because of that. Even that was too cumbersome, so they traded bonds above that of various types of countries and all this type of stuff. And he's saying that's what's going to happen with Bitcoin. Bitcoin's going to replace gold because it's easier and faster. It'll become the settlement layer. When people talk about payments, they're not saying, I'm going to pay you in Bitcoin. They're going to pay you in the various levels above that. And what he just clearly mentioned was the various levels of debt, corporate, private, government, mortgage-backed, credit cards, this type of stuff, and then the equity is above that. And he goes on later to talk about how he's transitioning his company from doing whatever it is to a Bitcoin completely focused company that issues those products at every one of those layers. Every one of those debt layers and every one of those equity layers, and they'll all be settled in Bitcoin. And he has the Bitcoin. B, the Bitcoin is going to get more valuable. He's claiming, as long as we don't keep having these sell-offs, and as more and more people use it as their settlement layer, they're going to need a company. They're going to need someone that can provide all these products. And now, Pedro, you might say to me, okay, banks can do that. That's no problem. And what Michael is saying, he's claiming that he's the only company that can do this properly because he'll be the only company that is actually centered in Bitcoin, valued in Bitcoin, and so its products are properly valued, whether he's in equity or in debt, and that type of stuff, in Bitcoin. Thus, to settle against the worldwide standard of Bitcoin. Banks, JP Morgan, Citibank, all these people, he said, they're actually way too diversified. They can sell you a Bitcoin product, but ultimately it's backed by fiat because it's backed by the bank, which is, and it'll ultimately settle to the US dollar or whatever your fiat is. And he said, that's not the point of this. The point of this is eventually the world has to trust something other than, the sovereign debt system and fractional banking system. It has to trust the settlement to the Bitcoin layer. He's making a giant bet on it, and he's positioning his company to do that. Now you say, wow, that sounds great. He's going to make billions. Pedro, how can this go wrong? How can this go wrong? Well, he's taken a lot of debt, right? He's taken a lot of debt on these things. And so what can ruin a bet based on debt? You're on mute. Mute.
So his underlying value is based off of Bitcoin. And the idea behind his system is really... Wait, let's backtrack here, because as I was listening, his ability also to raise cash based off of a fluctuation within Bitcoin is really important. As I was really kind of walking it through, this man really did walk this. I didn't realize that they were issuing warrants against their stock, and then taking that money and going through and deploying it into buying more Bitcoin.
Right.
Hence, buying up at a 10% sell-off, 20% sell-off. And I think that in itself was, I didn't realize that they were actually, I was wondering, where are they getting the cash to be able to buy? And what they're doing is they're issuing debt based off of the stock in which they're using for warrants. You're like, hey, give us your debt, you can buy our stock, and then if we come back, so it's like either or. So I think it's actually kind of smart, because you sell off on him. He's like, please sell off on my stock. Please sell off on this idea of Bitcoin. because the reality is because the underlying base value of my stock is literally and is Bitcoin. He goes, I would love it if it's sold off, because that means everybody else is based off of cash. Everybody understands like how important Bitcoin is. We're already seeing, like he said, let's say a nefarious country comes in and that we don't hold the same values as, wants to buy a Bitcoin. Good. If America wants to buy Bitcoin, good. If they want to sell, good. I'll just issue warrants for my stock at low values. And then when the price finally equals up to what it is, people sit there and go, cool, I'm making money. Then it shoots up, right? Because other people buy his stock. And I sat there and I was like, oh, wow, I get it now. And then he can create debt based off a true underlying value that isn't flawed, like the USD is based off of debt, the fractal system that we have.
But what can go wrong? What can go wrong with this?
Everything could just fall. If Bitcoin just fell.
A longer than normal bear market in Bitcoin. And say the next bull cycle, we don't have one. Say we have 2 bear markets in a row, and suddenly the asset value for his company isn't good anymore. Or I'm not saying that correct. I'm getting 2 topics confused. Say the value of his company or the value of his Bitcoin is less than his leverage, and he has to start selling some Bitcoin, and that depresses the price. If people hear he's selling for any reason, if he wants to buy a new jet and he's like, I'm going to sell a couple of Bitcoin and get the jet, people will still freak out and dump Bitcoin. They'll be like, selling event. So an unusually large bear market can do him in. I'm sure he plans for it, but this could go wrong and drag down the market. Another thing is these debt. On that topic, the debt levels could help unwind his company. God forbid he faced a liquidation event, or at least like I said, a sales event in which he had to sell. What is this? Solana meme troll? Paste. Anyway, and of course he's got an enormous hacking risk, right? And now obviously there's not just one wallet out there like in his pocket on his phone. If he gets held up, in Chicago, visits Chicago and gets his wallet stolen, suddenly $60 billion in Bitcoin doesn't disappear. He's utilizing custodial firms and all this type of stuff. However, even if one of those gets hacked and there's a big sell-off, that's a lot. That's a lot. It's a lot. And of course, one of the final things that could unwind his whole strategy is, if you remember the swamp creatures, what's the easiest way for the U.S. government to get a big reserve of Bitcoin? To seize it. Just take it. They can just take it. And you say, sorry, you got to turn it over to us. Just like and back in the day, Roosevelt said we need all the gold for World War II in order to fund the war, so you got to turn it in. And they paid you pittance for it. Could very well happen again. Not very well, but there's always a chance of anything happening. It could happen. There's a lot of things that could unwind his company. I would love to have him on to talk about this. He sits through a lot of these interviews like this. These same questions again. I'm sure Pedro and I could come up with a different take on these questions to entertain him.
There's things that I would say, look, I get it that you can actually create. My biggest thing is I see that you can create warrants, but the other issuance is people can short that. And if you're stuck, if we have an extended Bitcoin, listen, math is math until it no longer works. Okay, we have built a model of the Big Bang Theory based off of postulates to the best of the truth that we can get to. But the reality is there's still faulties in it. There's still gaps in it that we can't explain. This is why we still keep working at it to understand, to fill in. And a lot of the postulates we've had to change, right? Like Newtonian physics. And then from there, Einstein came about, and now Einstein models are falling apart in relationship to see how we look at the world. In the same sense, he's built this on a mathematical. I was about to use fallacy, but it's not. It's to the best of his ability to be able to mathematically build a correct structure. My biggest fear is that you're putting it's a lot of gas, and you're buying all this Bitcoin. But what happens if your company fails? Because there's, like you, as Tom says, an extended amount of, and I think ultimately there might even become, if we start to see that, and we start to see certain things happening within the economy, I think we might see, if anything, the government saying, hey, Mr. Saylor, we're going to see some of this, and it will be against the Constitution. It will be, but they can do it. Like the self-custody, we go to the custodial side of saying, hey, open up your cofferdams, send us the Bitcoin. So it's going to be kind of scary, but we'll see.
Well, it's a good point. I can see, we've talked about this a number of times, but I could see the U.S. government, like if Saylor did get in trouble, some event caused his company to get too close to that liquidation level, for whatever reason, the economic indicators, he made a mistake, they had a hack, insider stole something. There's all sorts of gotchas for that. But I could see him going to the U.S. government saying, hey, for this thing to fail here, especially during the Trump administration, if Bitcoin or MicroStrategy were to fail, it would make the Trump administration look terrible. It would be a black eye, this promoting, and all of a sudden there's, an FTX issue. All of a sudden every politician would run for cover and we'd have all these problems again. And so I can see that the administration going, fine, we'll buy a bunch of it off OTC and give you a big cash infusion. And will that work? And Saylor would be like, perfect, done. You get more BTC, I get some cash. Even if it's at a discount or, a distressed party discount or something like that. Doesn't matter. He gets the cash easily. Doesn't tank the market. They could do it behind the scenes, and even make an announcement. The U.S. government wanted a larger BTC reserve, so we went to the biggest people. They could even go to Binance and, buy a token amount from them and then bail out Saylor. There's all sorts of ways to do it. Yes, Solana meme troll. Yes, you are exactly right. They can use the media as the ultimate FUD machine, because nobody's ever done that before, right? Have you ever gone to use Instagram's threads? My Instagram feed puts threads on it. There is nothing but FUD on that thing. It's just like everyone that was unhappy with life went over to threads and complains about it. And it is any little bit of information that's negative, it's like amplified a million times. Oh yeah, the sun rose 1 second late today. See, I told you the world is ending.
It is. It's at a point you're just like, come on, man. There's got to be some. I feel like everything. I'm actually trying to coordinate and really kind of feed how I want to see that algorithm. And so I keep hearting a lot of these positive things and these things that basically bring like education. And even then, it keeps sending me just this crap. I'm like, why do you keep doing this? This is just horrible.
You're right, Draco. BlackRock was the biggest Bitcoin fudder until they weren't. And now they, as we all know, they've completely turned it around, and BlackRock is the big buyer now.
Yep. And it's what's interesting, I think, is Larry Fink himself, I think, was probably a proponent for BTC and crypto. But he was trying to FUD it, because if he could push it down lower and buy up what he needs to, it was good for him. The same thing like Noonbank, which was Fireblocks, one of their companies that they're working with, and they're kind of helping it out. They talked about literally, like they really get involved into the stable coins and really kind of the fee-based system. And that, Warren Buffett had bought them almost 3.5 years ago. And he had been talking trash about Bitcoin for a ton of time, but he knew that Bitcoin, stable coins, cryptocurrency was going to keep going. And so it's like, they're going to go out, do their best to soften the market itself so they can buy it more at lower costs. And I feel like that's what happened. I feel like we saw it with Larry Fink, as well as with Warren Buffett and many of these other guys who are like, well, it's more efficient, it's easier, this is going to be the future, and we're kind of late to the party. Let's see how far we can push.
Right.
This.
I got just a few notes I had written down lastly that I thought were interesting nuggets from Saylor's interview. He said that anytime an asset trades lower than its net asset value, or a fund trades lower than its net asset value, the only reason is because the lack of proper management or loss of faith in the management by the people that own the asset. And I thought that to be a very, very interesting thing. And he brought up Grayscale. For a while, Grayscale was trading at a much higher net asset value than Bitcoin. And then it was trading at a much lower level than it. And he pointed out, he said, the market lost faith in the people that run Grayscale. And that caused the announcer or the moderator to say, okay, well, there's a good example. Grayscale kind of blew it. Why can't MicroStrategy or Strategy blow it? And he made a good point. Is that Grayscale was a trust company. They were a trust and trusted with holding people's Bitcoin and not as custodian style, but and investing it in Bitcoin and that type of stuff, or their money investing it in Bitcoin. And Saylor's company is an operating company. And the difference is that operating companies can issue stock, they can issue debt, they can issue preferred shares, common shares, warrants. They can do whatever they want as long as it's within the rules for selling the securities to the public. And trust companies can't. They can't do anything. All they can do is hold. I don't mean like hold like crypto hold. I just mean they can just sit there and just make investments, normal investments. But they can't use the asset of the company itself to do things. So he said we're completely different, and it's not even apples to apples comparison. Found that to be interesting, very interesting. And then the last thing was, I think you hit upon it, saying he said, yeah, go ahead and sell the common stock. He said I'll just issue preferred stock, take the money from that, and buy the common stock back, and make a fortune as the price comes back up. He's got it all. He probably sits there all day and figures out all these different what if situations and has a solution
when he
for it.
said that, I was like, oh, yeah, you could do that's just simple, or issue it, and here's the thing, so people buy it back, or he buys it back, and then the people who had the warrants literally buy it back at a lower level, so they're like, oh shoot, I'm already up. It's like people who get into a stock, a coin at pre-market, right before it launches, right? But here's the thing: a lot of these guys who buy, they hold on for years. Like a lot of these guys are like, well, they're tied to Bitcoin. We all know that Bitcoin's going to move up. They're already doing well, and so I think I've changed my view on a lot of what he's doing, especially with some of the stuff that he's gone about doing it. So I gotta research a little bit more fully. I thought I'd understood his game model, but a couple things that he talked about,
Yeah, you're right, meme troll. You got that right. He's got the best of both worlds until no worlds exist.
Well, it's interesting with what he talked about. His micro strategies did kind of fall for over the last 2 weeks. We've seen here since May 9th. You've seen it kind of come down here, down to that 360 area here, which is our area that I'm looking for it to kind of.
Pedro, I don't have your screen up. If you can't hear it in the background, I'm running the outro right now. Like I said, I gotta roll. Got to roll here, and we've been on only for an hour and a half. See, an hour and a half goes by, Pedro. I swear, it seems like we have a 20-minute sitcom show. That's how fast it goes.
Hopefully people feel the same way. Also, I want to shout out to our guys over at Rumble. Thank you for coming in. To the new guys who did pay attention that I met over at StableCon. Thanks for coming in. Please make comments, ask me questions. We'll go into more just trading aspect. It's really kind of what we're becoming more of a. Maybe we talk about the news and we have topics, but it's I'm realizing more than anything, this is more becoming a trading show where we kind of give people alpha how to make cash.
We'll be doing that. We'll be doing a lot more of that coming up. Anyway, ladies and gentlemen, got to go early today. stuff to do on this Friday before it turns into the entertainment portion of the day with the lovely Mrs. Striking. So I got to run. Pedro, thanks for going to the show yesterday. Really appreciate it. To all of our viewers, once again, my name is Tom, otherwise known as Striking here in the digital media universe. The man in the box here is Pedro Garcia, the crypto chart analyst, doing a great bang-up job at making us all fat stacks of cash. Well, at least in the demo account. But anyway, ladies and gentlemen, we'll be here tomorrow. Tomorrow? Monday.
Yeah, I was gonna say. I was like,
wait, I was like, wait a minute. I just said today's Friday. Anyway, we'll be here Monday, same bat channel, same bat time. Anyway, we enjoyed the show again. We will enjoy seeing you here on Monday.